To you. Thank you for sharing part of it with me. I'm Jeff Pine, and I'm a member of the Actions to Wealth trading team who bring you Sunday market update each and every Sunday. As I say, thank you for sharing it with me. Should be half an hour, and we'll release you to whatever's left of your Sunday. Well, if you were with me the last probably two or three times that I've presented Sunday market update, you will know. Well, my narrative, I suppose, on Trump 2.0 and how to trade it. Good evening, Mahesh. Welcome. Today, I'm going to combine that with one of my favorite ways to trade markets, and that is off boundaries. I'll share my screen if I possibly can. Well, since I've done this, guys. Okay, that's not going to help. Shouldn't be too long. Righto, I'm getting there. Sharing. And with any luck at all, you should be able to see some cows, which is what the show is all about after all. If you can see some cows, it would be very, very nice of you to put one or two, or I can see cows in, or moo or something in the chat box. That would be good. And then I can move on without any problems at all. Moo, thank you very much. Um, yeah, so it's all about, for me, trading off boundaries. Not all the time, but there are many opportunities where you can isolate boundaries. And of course, boundaries can be lots of different things. They can be horizontal support and resistance levels. They can be channels, rectangular squares, rectangles, triangles, pivots, moving averages. As long as the market is going there consistently and doing something when it arrives at those boundaries, that's where we get to have all of our fun. I'm going to show you my method of doing that and give you some ideas as to how to trade the markets going forward, especially in this very turbulent and volatile time in which we find ourselves. So here we go. Of course, not all boundaries are equal, which I'm going to show you in the very next slide. Um, you've probably, well, you have all been taught, I'm sure, that the longer is the stronger, right? So the longer the time frame, the stronger the signal. And so too, the bigger time frame a barrier is on, then the more likely that barrier is to repel price. Now, when I started, the reason you're seeing moo cows here is when I started trading, it was the very first thing I was taught, and it's still embedded in my brain, that these animals are penned in by fences, right? And once they get to a fence, if they can't break it down, then guess what they'll do? They'll go to, yep, you guessed it, the next fence. And like I said before, that can be a rectangle, it can be a triangle, it can be a parallel channel, whatever you want it to be, or whatever it is. Our challenge, of course, is recognizing what they are and where those boundaries lie. But as I said, some boundaries are different to others, and the longer the time frame, the stronger the barrier. Now let's have a little look at this one here. And the last, as I said before, the last two or three times that I've presented this show, I've shown this particular chart. There are clear boundaries. This is a monthly chart of the dollar index, right? And to me, it's a super important chart because, well, the dollar, the US dollar, is relevant to a whole bunch of assets, right? It's still the major currency of the world. Everything's still traded in US dollars. That is changing. Yes, I 100% agree with that. And ultimately, fundamentally, it's very, very difficult to be bullish, the US dollar. However, I'm going to show you now why it is possible from a charting point of view to be, even if it's only in the short term, a little bit bullish, this particular asset known as the US dollar. So this was really my go-to chart. Um, well, as soon as Trump 2.0 became reality, why would you think that would be? Well, because I was looking for something that showed me what happened after Trump was elected the first time. And I pontificated that maybe if that happened before, perhaps it can happen again. That was the thesis or the basis on me searching this particular chart. The red lines that you see on this chart depict that. So if I can use my cursor, hopefully you can see my cursor. Maybe I can use a pen. There we go. So the thesis of the red lines is the first red line here is back in 2017 when 2016, sorry, November of 2016 when Trump was elected. And I wanted to know what happened between the time he was elected, and as we all know with presidential elections in the United States, they happen in November, but the new president isn't inaugurated until January. So what happened after Trump was elected is the red line, the first red line, and the second red line is what happened after the inauguration, or in other words, what happened when he got into office. So you can promise, 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 but until he actually acts, and he acts very quickly, as we now all know, there's really nothing, no substance. Maybe hints, lots of hints, and he did give them, no question. So in this case, in 2016 into 17, the market after the election went up, up. This is the US dollar for 3 months before it turned around. So I thought that would be interesting to compare to what happened since the 2020 election. So 2020 elections here, we went up, up, 3 months later, down. Now that 3 months later, guess what that is? That is the inauguration, right? So that's exactly what happened. The market did exactly the same thing, went straight up after the election and has come straight down since the inauguration of Trump. Now, you may say that's a coincidence. Fine. We're each entitled to our own opinion. I don't believe that's the case. I believe that was going to happen. And ultimately, if you have a look at the next one, and I'm sure you've all seen it anyway, that's exactly what did happen. I've missed a slide here, guys, for some reason. That's weird. Okay. Well, maybe you're just not seeing it. Anyway, you can't see my cursor. Okay, I'll do a bit better than that. For some reason, I cannot see the slide that I wanted to show you, but now I'm seeing it on my next screen, and there it is. So that's what happened. Can you see the cursor now, Mahesh? See that circle? When I did this webinar, the last time I did this webinar, beautiful, thanks, Roberto. This is where we were here, right? So going back to the previous slide. And remember I said that all boundaries are not equal. This channel here, which is the monthly chart, super strong, right? And you can see it whenever we get to the top, we head towards the bottom, top to bottom, and ultimately we hit the bottom, ultimately we hit the top. So with that in mind, where would you think that the next boundary touch is going to be? Well, if all things are equal, then it had to be here, right? And that tied in beautifully with the thesis that after the Trump inauguration, the market went down for 1, 2, 3, 4, 5, 6, 7 months before it actually stopped going down. So we've been 1, 2, 3, 4, 5, 6. We're in the 6th month now, and we're soon to hit the 7th month. Coincidentally or otherwise, we are at what I call an inflection point, certainly at the bottom of that channel, right? And here's where I get excited because this is now telling me that we are at an inflection point and something will happen here. Whether that is a bounce, to the upside or whether it is a break to the downside. I don't know that yet, but that doesn't matter because I can wait until the market tells me exactly what is going to happen next. Smaller channel, broken false, broken here. Is it false break of the inner channel? I don't know yet. But it looks to me like we've had a break and a retest. And of course, that drove it down to the bottom of the bigger channel, the most potent, if you like, of the two channels. Now, what happens next? Do we go, I wish it didn't do that. Sorry, guys, these slides have just got me confused at the moment. Do we actually go up here and bounce off here and head towards the top of this channel again? Fundamentally, as I said before, I cannot make a case for that. I simply can't see how in this environment where you've got things like BRICS, you've got things like the petrodollar collapsing, you've got things like China wanting to revalue or revalue the yuan to gold rather than against the US dollar. With all of that going on, and there's plenty more going on, can I actually see the dollar strengthening? No, I can't. Fundamentally, I simply cannot. So my bias currently is anti what the chart's telling me. That's a time where I need to go, something's not right here. Something's amiss. Am I right? Is my fundamental view right? Or is my technical view right? Well, I don't know yet. But this chart should tell me. How so? Well, if it's going that way, it should start going that way and then go into trend, similar to what it does here and here. So all I need to do is wait for that to occur and then jump on board. I don't need the first move of that, right? I just need to confirm that the market is going up. That for me comes in the form of a higher low. If it's accompanied by a higher high, all the better. But really, I'm looking for a higher low to confirm to me that this channel is still intact, is still in play, is still strong, and I want to be part of the move that goes up that way. If that doesn't happen and we get a break here, I won't know if that's real until I see a lower high or essentially a retest of the channel. So I want to see, and I'll get rid of all this stuff. It's getting a bit messy, isn't it? Can I do that? So I'm not used to this pen. There we go. So I want to see this happen. Sorry, guys, when I click, it's changing my slide, and I don't want that to happen. Let me try it again. Okay, so if I see that happening, that break, I won't be trading the breakout. I'll be trading either the retest or a lower high. If, however, we come straight back inside here and retest that level, I'll be looking for price to go back where it came from. So there's all those three scenarios exist. It's a matter of recognizing which one is which. It's not a matter of going, okay, the fundamental story is, well, for me anyway, I mean, whatever floats your boat. But for me, I've got to be very confident that what has happened is a harbinger of what is to happen, not what is likely to happen or what could possibly happen is what I need to trade. I need to trade what I see. And if I see that break and retest without coming back into this area here, then I'm happy that we're going that way. But if it does come back in here, I'm happy we're going that way. So all of those little nuances are there, but this is what trading the boundaries is very good at doing because it becomes, or trinary, if I can put it that way. It's either going to bounce It's either going to break or it's going to be a false break. They're the only three options that are possible once you've hit these boundaries. And these boundaries are so frequent that you wouldn't believe it. I'm going to leave this now and I'm going to go to the euro dollar chart, which is really a proxy for the US dollar. So maybe you don't trade the dollar index. A lot of people don't even recognize it or have it on their charts. So I'm going to go to something that is on your charts, and that is the euro versus the dollar. Now, this is a complete reversal of the chart that you just looked at. Once again, we're on the monthly chart, and the monthly chart is telling me exactly the same thing. We are at an inflection point, and there is the inflection point. Do I need to do anything now? Well, a couple of things. If I'm already long US euro versus the dollar, which a lot of people will be at the moment, then I don't need to do anything, but I'd need to pay attention. I need to pay attention because we're getting to that inflection point and something is likely to happen. Perhaps that something is this, which is what happened last time we got to this level. This level meaning the top of the channel, not the horizontal level. But this, speaking of the horizontal level, it's not too far away from where we are either. I don't know if you saw the other slide, which suggested that post the Trump inauguration, there was a 13% decline in the dollar index. And that 13% was just below where the bottom of that channel is. Well, that fits this narrative absolutely to the letter, because if I can find my pen again, here we are, because that would be around about that level or very, very close to it. And at that point, we got a turnaround. Now, is that going to happen again? Look at what happened in the first instance, or Trump 1.0. The market went up for 7 months before it retraced slightly. Then it hit the boundary, right? And what happened after that, we can all see. So currently, we've been going up for 1, 2, 3, 4, 5, 6 months. And once again, the narrative could be filled by 7 months going to probably this level. What I would then be looking for, pursuant to what I've just shown you on the dollar index chart, would be one of three things, really. The first thing I'd look for is a retest of that level, a retest of the breakout level. If that were to be the case, and we finished up with a higher low here, then I'd be pretty keen to trade here, but not through that level. I'd want to get some money in the bank before I hit that level. The other option would be to wait for price to come back underneath this channel and retest it from below, giving me a lower high. And then I'd be confident that if price came back to there, guess what? It's going back to the bottom of that channel. Now, I cannot, for the life of me, see that happening. I truly cannot, for the life of me, see that happening from a fundamental standpoint. I'm not a fundamental trader, but it's got to be in my mind what's going on in the world. And what's going on in the world is not pretty for the US dollar. That said, I will follow what happens here, not what I feel can happen as a result of the fundamental situation. This is all about trusting the chart and trusting what price tells you once it gets to those levels. Now, I know we're not all trading on monthly charts, though I would suggest to you sometimes when you've got a volatile situation, it's not such a bad idea. But these opportunities that I'm talking about come up so regularly once you've hit the top of a channel or the bottom of a channel, horizontal level, trend line, moving average, whatever the case may be. You've just got to wait and read what price has done once it's hit that level. It will do something, I promise you that. It'll break it and retest it, go again, or it'll come back inside it and go in completely the opposite direction. So bounce off the boundary, if you like. So carrying on with that thesis, where do we go from here in terms of what are we going to trade? How are we going to trade next? What's the most likely outcome for all of these currency pairs and these assets and indices or whatever the case may be? Well, it's a simple matter of finding, for me, I mean, and if you wanted to have a look at this, finding the boundaries. Where are these boundaries? Well, it's simply a matter of looking at the charts and going, oh, I've got a descending line here that's joining two lows. One here, one here. As soon as I've got two like that, and there'd be two up there that would be equidistant, so this may well have started as a channel in that direction, or same direction, but off those two. Once I've got two at the bottom and two at the top, that's when I can trust the lines. I can trust that if we get a bounce off here, we're going to go down here. If we get a bounce off here, we're going to go down here. I can trust that after two times on both the bottom and the top. Same with the horizontal level, same with the trend line, same with the moving average. So then I don't have to look at the monthly chart at all because I know we're here. What I can now do is go to the weekly or the daily chart, even the intraday chart if you so chose, and look for exactly what I've described here. So look for a false break of that level, or look for a break and retest of that level. That will tell you the direction that you should be trading in. That's why I believe boundaries are super, super important to you. I'm going to give you, well, I'm giving you one here, euro dollar. This is my focus for the next goodness knows how long until I get that signal, the signal whether we're going short, long, or waiting. I'll be doing that until it tells me. I'll also be looking, this is the daily chart. This gives you exactly what I was just talking about. So if we're coming off the bottom of the channel, as we are here, there are a lot of opportunities to trade on the daily chart once you've got that bigger picture in mind. So here's right off the bottom. Now you've got a higher low here, a higher low here, and then you've got the breakout. So depending on how you get in the market, and I'm not preaching that to you tonight. I'll come back to that in a second. But my method has got lots of entries here. This is what I call a dominator. So I would enter there. I would then enter again here, break, retest. So I'd enter here and I'd go again. We've got another opportunity up here, exactly the same thing. We've broken the trend line, we've retested the trend line. You would have had to have been a little bit clever where you put your stop loss in that case, otherwise you would have got smashed. Another one here, breakout, retest, another entry up here, and away you go. So it's a matter of, okay, here's the boundary. We've hit the boundary. This one's bounced. And now we're looking for higher lows, breakouts, retest, higher lows, breakout, retest. The two red horizontal lines on my chart are horizontal levels that I respect or the market respects. So this goes back into the past, but you can see here it's been resistance, resistance, resistance. And once that resistance broken, then happy days, away you go. Didn't get a retest here on this one, but that's such a strong candle. And you've got a sequence of triple bottom, higher low, second higher low. Just for clarification, the second low out is a better one than the first one, but the first one's not too bad, and I trust it. But the second one is always really good as well. So they're simply horizontal levels that the market has respected in the past. You can see over here as well that was respected at that level. And of course, there's a whole lot of support and resistance here as well. So those key levels is what they are at the end of the day. Zoe, what's the likelihood that the candle will resist the channel and bounce downward? Well, the way to work that out, Zoe, actually, I'll go to a new chart to show you how to work that out. But it's simply a matter of history. So look left at the end of the day. The likelihood on any single occasion is impossible to work out, absolutely impossible to work out. But that's why you need precedents. You need to have at least two, top and bottom, to give you a recognition point, if you like, or a history that the market or price does react at those points. But there's no way in the world that um, you can give me a likelihood that that's going to happen unless you're using horizontal levels. And then you can work it out because you can go back as far as you like in the chart, and I'll show you how to do that in just a tick. You can go back in a chart and say, well, okay, over the last 30 days, this has happened 10 times, and every time it hits that level, it bounces off it. I trade that every day on a 30-minute chart with euro dollar, and I'll share that with you in just a tick. So the point of the exercise is once we've hit those boundaries on the monthly chart or weekly chart, if you like, or you can transfer it to whatever chart you like, but the monthly is really, really strong, weekly strong, daily strong if you're trading intraday as well. Once you've hit those boundaries, switch down a couple of time frames, and then you'll find where your trades will be. Again, I'm not here to give you methods of getting into the market per se, but my methods are pretty clear. I'm looking for those bounces. I'm looking for higher lows or lower highs, whatever the case may be, and retests of the previous level. So what else am I interested in? The euro. I'm definitely interested in the euro. This one is interesting. How about silver versus the US dollar? Again, along that Trump line, this one is absolutely going with that thesis or that theory that the market is reacting to whatever Trump did 8 years ago, basically. I'm seeing exactly the same pattern emerge. But this one's a classic. This is a clanger. This is silver. Now, silver versus the US dollar. I don't know if any of you know the history of silver versus the US dollar, but for the longest time, it's been manipulated by the big players, and there's been a cap, not physical, and you can't see it, but it's there. Every time silver gets to a certain level, they knock it back. And for whoever interest that is in, that has been the case for a long, long time. There is some or in fact, there are a lot of commentators at the moment I've noticed that I've been listening and watching, or listening to and watching, who are telling me that particular scenario of silver being manipulated is now over, which is very, very interesting. And if that's the case, then wow, the sky's the limit for this thing at the moment. But because we are boundary riders, we're not looking for the sky here, we're looking for a boundary. And at the moment, I've got a boundary here. And again, that red dotted line is a horizontal level that I believe the market will react to. So I've got a nice confluence here, top of channel and horizontal level on silver. Now, I'm massive bull of silver. I hold silver, trade silver, and nothing would please me more than to see silver go to $50. And ultimately, in the next 6 months, if what we've just heard, or what I've heard, and this manipulation of silver is no longer in play, then I see absolutely no reason why we don't test that high around about the $50 mark. But I can't trade that to there now. If I'm in the trade, fine, and I am. But if I'm not in the trade, I probably need to wait to hear and see what happens. Once again, I need to see if this is going to break and retest, which gives me an entry on the smaller time frames, if you like, or I need to see if it's going to bounce primarily off here, give me a lower high, or it breaks, but it can't maintain the break and comes back underneath like here, similar to what it's done here, right? So it couldn't get through this level, back under it came. Guess what? Gave you a lower high. Away you go, away you go, away you go. Triple bottom, quadruple bottom, higher low, away you go in the opposite direction. So that's the methodology that I will use, but I'm already in those trades, so I can add once we break here, no problem. But um, again, it's the boundary that will tell me what next to do. So there's one that's two for you. Euro dollar, watch that. Watch silver. And like I said, this is a classic because of, and I already gave you the hint, this beautiful chart pattern. Those of you who don't know what a cup and handle looks like, well, there's a picture of one right there. And this doesn't look too different to that, does it? And of course, that red line, that trend line that I've got there is what I call the neckline. And that neckline was broken and retested here. So beautiful entry on that bar, if you were paying attention. And as I said before, silver could have a very, very good run here if what I'm hearing from the commentators is on the money. Now, of course, commentators don't often get everything exactly right, so that may well be off the boil, but under the guise of where there's smoke, there's fire, I'm more than willing to stay in the trades that I'm in on silver. But watch it and see what happens at this level here. In my humble opinion, that could well be worth your while. What else do I want to show you? Oh, still on silver. What about a 45-year cup and handle starting in 1980 on silver, Aiden? Yeah, okay. Haven't looked at that, I must admit, but this is pretty cool. This one that we've got here, and I would imagine exactly the same thing applies. You'll have a boundary there as well. If you combine the neckline with the cup and handle, you should be able to trade that as well. What I've marked here is the neckline once again, and the measured move. There's what is expected to happen here is expected to duplicate here once the breakout occurs. That's not necessarily my theory, but it's a working theory, and a lot of people will go by that. And it often happens that that's the case. The nice part about that is it coincides with my thesis that this level here is strong, and the top of the channel should be an excellent opportunity to look for a trade. Again, against the US dollar, this looks, in my mind, from a fundamental point of view, unlikely to go back. But if the chart tells me that's the case, then that's exactly what I will have to do. Trade it, or certainly get out of my longs, not necessarily trade it short. Okay, so gold, sorry, not gold. I'm not going to do it with gold today. But silver, I think, is well and truly on the mark. Here's another boundary that I want you to recognize and concentrate on, because these happen on every single time frame, every single day of the week, especially on currency pairs that are recognized as ranging pairs. This is one of them, one of the classics, US dollar versus the Canadian dollar. And once again, going back to the thesis that we are in a bearish US dollar time frame, flavor, whatever you want to call it, going with that thesis, then this fits that bill absolutely to perfection. Got a little bit of a problem with it at the moment, in that this horizontal level here looks to be holding. When I say that's a problem, I don't think it is a problem. I think it's an opportunity, because there's another horizontal level there. And what I'd be looking for right now is for the US dollar to rally short term and take us back to that level, at which time I'll be certainly looking for entries here short on US dollar versus the CAD. But going back to the thesis, we've got one here, equal highs, equal lows, And that's when you start paying attention. On this chart, once again, we're on a monthly chart. There doesn't seem to be that many opportunities to trade it, but slingshot traders will recognize that as a trade. Short, they'll recognize, I'm a slingshot trader, by the way, that's my trading style. They will recognize a break and retest of that level, and then a dominator trade here. There are lots of opportunities here, even on a monthly chart. But if you consider that there's a bullish engulfing bar and a little bit of a retrace on a daily chart, that's going to look like a really good trade. And if you continue to follow that scenario, you'll do okay because these boundaries are there and they are solid. Once you've got a monthly chart that looks like that, you can put a fair bit of faith in this going that way. And I think dollar CAD is among one of the better of the boundary rider trades at the moment. Now, I did say I was going to show you um, reliable levels. I'll just do it super quick because we're out of time. I'll have to go to this chart. Guys, can you see euro dollar? There we go. Can you see a euro dollar chart, 30-minute chart? I've got my cursor going circle, circle, circle. Hopefully you can see that. If not, I will change. Yes, perfect. Thanks, Aidan. So here's the thing with euro versus the dollar. And like I said, this is what I trade every single day. Now, when I say trade every single day, that doesn't mean I put a trade in the market every single day. What it does mean is I'm monitoring exactly what happens every single day. I'll just get rid of that for now. And what I noticed over, how long have I been trading? 18 years. What I've noticed over 18 years is that there is a certain frequency on euro versus the dollar that gives us a huge advantage in being able to trade it. Now, I trade this on a 30-minute chart, and going back to the one of the questions before, which was how do we predict what was the or the likelihood from Zai? What's the likelihood of this occurring? Well, you can work this out because all you need to do, and what I've got here, right, is I've got the daily pivot is the purple line. The red line is daily support number one, and this other red line below it is daily support number two. Above it, I've got daily resistance number one, and I've got daily resistance number two. So you can work out the likelihood of the euro dollar going from, as I do, DS1 to anywhere, or DR1 to anywhere, or wherever price is to DS to DR1, or whatever price is to DS1. You can work that out simply by counting. You just go backwards and count. Did it happen here? Yes, it did. Did it happen here? Yes, it did. Did it happen here? Yes, it did. What do I mean by that? Okay, so here's roughly how I trade this. I'll be doing a course on this at the end of the year, I think, but I want to show you exactly here how I deal with it, and I wish it wouldn't do that. Sorry, guys. I'll get back to that chart as soon as I possibly can. There we go. It should be back. I can't use the pen, but what I will do is show you exactly what I'm doing. Euro dollar on a 30-minute chart, so intraday, every day, has a certain nuance about it. And that is, no matter how it's trending, it will still react off the pivots. And when it does so, I can take advantage of that. It doesn't do it all the time, of course, but I can take advantage of it when it does. And that's what I mean by, yes, I'm trading every day, but not putting an order in the market every day. And there are certain times where you don't want to be doing that. And that would be, major releases because you can't predict what's going to happen on those major releases. But what you can predict with a good deal of confidence is that because euro dollar stays between DR1 and DS1 most of its time, and if you look, you will see that's the case. It doesn't go outside those lines very often. We can take advantage of that, and I do it in a couple of ways. But the easiest way to do it is to Depends on when you're opening your charts, of course. But if you're trading Asia session, in all likelihood, price won't be anywhere near DR1 and it won't be anywhere near DS1. So what I will do, and I don't trade Asia session, so I come into London session, and if I haven't had a test of DR1 or DS1, then I'll place an order. The order will be I want to buy at DS1 and I want to sell at DR1. That is a one cancels other trade. So if one triggers, you cancel the other. Now, in the last 3 or 4 days, that has been infrequent. But on Friday, it worked a treat. So coming into London session, we're here. DS1 had not been tested. So I put a buy order here on DS1. I put my stop loss 15 pips below DS2, sorry. And you then take your profit. Well, sorry, this is how I manage it. You can manipulate it, test it, whatever you want to do with it to find a better or best outcome for yourself. What I then do is as soon as the market closes and I'm positive, which in this case it was on Friday, I close. Now you could manage that in many different ways. You could move your stop loss underneath the bar. You could move your stop loss underneath the swing, whatever you want to do. The management of that is up to you. But the best outcomes are when you close at the first positive close. So it could go into tomorrow, it could go into Monday, sorry, it could go into Tuesday. But as soon as you get that positive close, you close the trade. Now here on last Monday, you would have entered the market here and you would have put your stop loss here. Now you didn't get a close positive until you probably got taken out. I didn't trade this, so I don't know the answer. No, I don't think you would have. 15 pips above there is there. So the market never got there. So as soon as you got a positive close, which happened here on Friday, you would close the trade. So that's the way that works. Here, you wouldn't have got a positive trade, so this would have been a loser. So coming into London session, you place a short order here, place a long order wave down there. Your stop loss is up here somewhere, but you never got positive. So that would have been a loser. This one here, however, you would have had an entry here short, stop loss up here, positive close here, close the trade. Exactly the same thing here. You have a buy order here, positive close, you close the trade. Same here. Yeah, this would have been a hell of a ride, but you put a buy order here, stop loss is way down here somewhere, you got a positive close, and therefore you close the trade. That was a decent one, but my goodness me, you would have had a heck of a time there. Interesting. You might have got lucky and put a take profit here. That would have been good, but that's not the rule. And here again, you've got a sell order here off the DS1 of DR1, sorry. Positive close is here. Nice trade. You don't get those too often, those big ones, but the little ones you get quite frequently. So there you go. There's a few ideas for you guys how to trade this volatility, this Trump thing that we all have to put up with. The boundaries are the ones I would recommend to you. Study them, find them on the charts, and then look what happens once price actually hits them. But that euro dollar one, that's not a bad one either off the 30-minute chart. All right. That's it for Sunday Market Update this week. I have gone over time. My apologies for that. I hope you got something from it. And I look forward to the next time we catch up with you, which I think is in about a month or so. Have a great trading week ahead and take care. Bye-bye for now. See ya.